Good day, everyone. This is Grace Joy Misoles, and today I will be discussing the illustrative case 17.1, which is an analysis of shareholders' equity accounts. During May 2017, Glen Incorporated was organized with 3,000,000 authorized shares of 10 pesos par value ordinary shares, and 300,000 of its ordinary shares were issued in 3,300,000 pesos. Net income through December 31, 2017 was 125,000 pesos. On July 3, 2018, Glen issued 500,000 of its ordinary shares for 6,250,000 pesos. A 5% share dividend was declared on October 2, 2018 and issued on November 6, 2018 to shareholders of record of October 23, 2018. The market value of the ordinary shares was 11 pesos per share on the declaration date. Glen's net income for the year ended December 31, 2018 was 350,000 pesos. So during 2019, Glen had the following transactions. First, in February, Glen required 30,000 of its ordinary shares for 9 pesos per share. Glen uses the cost method to account for treasury shares. Second, in June, Glen sold 15,000 of its treasury shares for 12 pesos per share. And third, in September, each shareholder was issued for each share held one right to purchase 2 additional ordinary shares for 13 pesos per share. The rights expire on December 31, 2019. Fourth, in October, 250,000 rights issues were exercised when the market value of the ordinary share was 14 pesos per share. And fifth, in November, 400,000 rights issues were exercised when the market value of the ordinary share was 15 pesos per share. Sixth, on December 15, Glen declared its first cash dividend to shareholders of 0.30 per share, payable on January 10, 2020 to shareholders of record on December 31, 2019. Seventh, on December 21, in accordance with the applicable law, Glen formally retired 10,000 of its treasury shares and had them revert to an unissued basis. The market value of the ordinary share was 16 pesos per share on this date. And lastly, net income for 2019 was 800,000 pesos. So we are required to prepare a schedule of all transactions affecting the share capital, share and peso amounts, additional paid in capital, retained earnings, and treasury shares and peso amounts, and the amounts that would be included in Glen's statement of financial position at December 31, 2017, 2018, and 2019 as a result of the above transactions, showing the supporting computations in good form. So, this is our solution for illustrative audit case 17.1. So, Glen Incorporated computation of shareholders' equity accounts, December 31, 2017. So, issuance of 10 pesos par value ordinary shares in May 2017. In our share capital, our shares is 300,000 and it is amounting 3,000,000 pesos. In our paid in capital in excess of par, we have 300,000 pesos. And our net income for 2017, in our retained earnings, we have 125,000 pesos. So our balance for December 31, 2017, our shares is a total of 300,000 and our share capital amount is 3,000,000 pesos and paid in capital in excess of par 300,000 pesos. and our retained earnings, which is a total of 125,000 pesos. Next, Glen Incorporated computation of shareholders' equity accounts on December 31, 2018. So our balance for December 31, 2017, our share capital shares is 300,000 and our share capital amount is 3,000,000. Paid in capital in excess of par, 300,000 pesos, and a retained earnings of 125,000 pesos. So issuance of 10 pesos par value ordinary shares in July 2018, our share capital shares is 500,000, which is amounting of 5,000,000 pesos, and our paid in capital in excess of par is 1,250,000 pesos. So in 5% share dividend issued on November 6, 2018, our Schedule 1, our share capital shares is 40,000 and our share capital amount is 400,000 pesos, and paid in capital of excess of par, 40,000 pesos, and credited by our retained earnings, which is amounting 440,000 pesos, and our net income for 2017, which is 350,000 pesos. So that makes our balance for December 31, 2018, share capital shares 840,000 and our share capital amount 8,400,000 pesos, and paid in capital in excess of par 1,590,000 pesos, and our retained earnings of 35,000 pesos. So we are required to prepare a schedule affecting the account of Glen Incorporated. So this is our Schedule 1, our share dividend. So first, our ordinary shares issued and outstanding on October 2, 2018 is 800,000 shares. Our share dividends issued on November 6, 2018, which is a 5% of our 800,000 pesos, is a total of 40,000 shares. So our market value of ordinary shares on declaration date is equal to 11 pesos. So this makes our charge to retained earnings for share dividend 440,000 pesos. So next is Glen Incorporated computation of shareholders' equity accounts December 31, 2019. So balance for December 31, 2018, in share capital we have shares of 840,000 and a share capital amount of 8,400,000 pesos. And paid in capital in excess of par, we have 1,590,000 pesos and a retained earnings of 35,000 pesos. So next, reacquisition of shares of 9 pesos per share in February 2019. We have treasury shares, which is our shares is 30,000 and our treasury shares amount is 270,000 pesos. And next is a sale of treasury shares for 12 pesos per share in June 2019. Our paid in capital in excess of par is 45,000 pesos. And our treasury shares, which is a deductible of 15,000 of shares and a treasury share amount of 135,000 pesos. So next, exercise of rights issues for 13 pesos per share in October 2019. Our share capital share is 500,000 and our share capital amount is 5,000,000 pesos. And our paid in capital in excess of par is 1,500,000. And next, exercise of rights issues for 13 pesos per share in November 2019. Our share capital shares is 800,000 and our share capital amount is 8,000,000 pesos. And our paid in capital in excess of par is 2,400,000 pesos. So next is the cash dividend of 0.30 pesos declared on December 15, 2019. Our retained earnings, which is a deductible of 637,500 pesos. And next is a retirement of treasury shares on December 21, 2019. A deductible of share capital share of 10,000 and a share capital deductible amounting 100,000 pesos and paid in capital in excess of par 10,000 pesos and a deductible treasury shares 10,000 shares and a treasury share amount 90,000 pesos. So the net income for 2019 is 800,000 pesos. So our balance for December 31, 2019, our share capital shares is 2,130,000 and our share capital amount is 21,300,000 pesos and our paid in capital in excess of par 5,545,000 pesos and a retained earnings of 197,500 pesos and a treasury shares of 500,000 shares and the treasury shares amount 45,000 pesos. Next is our Schedule 2, which is the cash dividend. So first, ordinary shares issued and outstanding is 2,130,000 shares and deduct in treasury shares held at December 31, 2019, which is 5,000 shares. So that makes our ordinary shares subject to dividend 2,125,000 shares and a cash dividend of 0.20 per share. So our ordinary shares subject to dividend, which is 2,125,000 shares times our cash of dividend of 0.20 per share, which is 0.30 pesos. That totals our cash dividend 637,500 pesos. So that ends my report. Thank you for watching and God bless.